Today, we're diving into one of the biggest stories in global finance. India's Unified Payments Interface, UPI. It's something that has completely changed how over 1 billion people think about and handle their money literally every single day.
Just to give you an idea of the sheer scale we're talking about, UPI now processes more than 11 billion transactions in a single month. Yeah, you heard that right. It is, without a doubt, a global success story.
But here's the thing about all this amazing convenience. If every scan, every transfer, every single payment is completely free for you and for the shopkeeper, who is actually footing the bill for this digital miracle? Someone has to be, right?
To really get to the bottom of that question, we first need to appreciate just how revolutionary UPI really is. For millions and millions of people, it's basically become India's digital easy button. So what is it exactly? Well, launched way back in 2016, UPI is this amazing system for instant payments. It lets you shoot money directly from your bank account to someone else's. The secret sauce is the virtual payment address, or VPA. Just think of it like an email address, but for your money. No more messing around with clunky account numbers or IFSC codes.
I mean, the difference is just night and day. Before UPI, digital payments could be slow, super complicated, and you'd often get hit with fees. You had all these different wallets and apps that didn't talk to each other. UPI just swept all of that away. It created one single, seamless system that's instant, free, and works across pretty much every app and every bank.
And wow, did people adopt it? It's woven itself into the fabric of daily life, especially for people in cities and for small businesses. They're the real power users, right? Making anywhere from 15 to 30 transactions a month. It's now just the default way to pay for everything. Okay, so that brings us to the heart of the matter. Because that free transaction you just made, well, spoiler alert, it isn't actually free. Behind every simple tap and scan, there's a really complex and, believe it or not, pretty expensive process running in the background.
Let's walk through a simple example. Say you're buying a pack of biscuits for, 20 rupees. The second you scan that QR code, your app checks out the merchant. That request then zips through the NPCI's, let's call it a digital highway, to find your bank. Your bank confirms it's you, takes out the money, and sends you an SMS. That little text message alone costs about 12 paise. Then the merchant's bank gets the signal, adds the money to their account, and sends them another SMS. All of this happens in a blink, but every single step has a cost.
So you take all those tiny little costs, you multiply them by billions of transactions, and what do they add up to? Well, industry experts figure that banks and payment platforms are spending a mind-boggling 32,850 crore rupees. That's over $4 billion every single year just to keep this free system humming along.
And the reason they can't make that money back is because of a government policy called zero MDR. Now, MDR, the merchant discount rate, is just the normal fee that merchants pay for processing digital payments, like with a credit card. By making it zero for UPI, the government made it a no-brainer for everyone to use, but it also cut off the main way for the companies running the infrastructure to actually make any money. And that brings us to right now. After years of shouldering these huge costs, the system is starting to show some serious signs of financial strain. The very thing that made it grow so fast, the fact that it's free, is now kind of threatening its own survival.
And look, this isn't some secret, even the highest authorities get it. As the RBI Governor Sanjay Malhotra put it, UPI isn't free even now, and someone is paying for it. The hard reality is that the current model just isn't built to last, and government subsidies, while helpful, just aren't enough to cover these massive and growing costs.
This whole situation has kicked off a kind of domino effect. First, the banks, who can't just keep losing money, start charging the payment apps, the Google Pays and Phone Pays of the world. Then, those apps, with their own profits getting squeezed, turn around and pass those costs on to merchants with new platform fees. So you see what's happening? The financial burden is just getting pushed down the line, getting closer and closer to the everyday shopkeeper. So all of this has brought UPI to a really critical fork in the road. A decision has to be made. Do we keep it totally free for everyone? Or do we figure out a way to make it financially healthy for the long run?
But here is the massive catch.
A recent survey found that 3 out of every 4 users would just stop using UPI. They'd go right back to cash if they were charged a fee. That's the core of the dilemma, right there.
Which of course raises the billion-dollar question. What does the future of free payments in India even look like? Can this incredible system actually survive? And if it does, how?
From what everyone is discussing, there are basically 3 main paths forward. The first is a controlled MDR, where only large businesses would pay a tiny fee. So in that case, the big businesses pay. Second, the government could just keep paying for it with bigger subsidies. So who pays then? Well, the taxpayers. And the third option, the one nobody seems to like, is to charge users a direct fee. But like we just saw, that could put the whole system at risk.
Okay, so let's zoom out for a second. After going through all of that, what are the crucial takeaways? What's the bigger picture here?
First, and we can't say this enough, UPI has been a phenomenal success. It's truly acted like a public good, boosting financial inclusion and just making daily life simpler for hundreds of millions of people.
Second, the very thing that made it so popular, the fact that it's free, is now its greatest weakness. The banks and fintech companies pouring billions into keeping it running, they just can't keep absorbing these massive costs forever. It's just not sustainable.
And that brings us to the third and maybe the most important takeaway. The great challenge for India's digital future is finding a balance. How do you pay for this incredible piece of infrastructure without scaring away the millions of users who made it so revolutionary in the first place?
Which leaves us with one final and really crucial question. The system has totally transformed a country, but as the costs keep piling up and the financial strain gets worse, can India's digital miracle actually afford to pay for itself? Thanks for watching.